Hello everyone, this is Jim from the Art of Finance. Welcome back to our channel. We are with you on 17th of November intraday analysis. Alright, let's speak about some news, then we will go back to charts as usual. What happened yesterday? We have received US retail sales data and manufacturing data. All was good and all was positive data. And after that one, we have seen dollar index hovering to 69 levels. So reason, because demand is making pressure on inflation side as well. When there is a demand on something and there is not enough supply, just like US oil, the price goes up. So it is also same for the goods. Right now in US ports, everything is just stuck, and then it's being waiting for months in some cases to be unloaded, and sometimes like in weeks. So people are trying to buy goods and stuff, but these problems are not being solved, and then the prices are going up for urgent things. So demand is in retail sales are covering faster than supply bottlenecks solved. That's why this is keeping pressure on inflation. When inflation goes higher, people are expecting rate hike sooner than planned. Yesterday, St. Louis Fed president Bullard just said maybe it's the right time for a rate hike sooner than planned, so we can curb inflation. He said these words, and then we see that the inflation can be lowered with interest rate. This idea has support as well from Fed officials, and in the next FOMC this will be talked this morning. Let's look at this morning data. This morning we have received data from Japan and UK. In Japan, we have seen less growth in exports than expected, and also trade deficit was narrower in like less than expected. That's why it's getting like a point. Slowdown in Japanese economy is happening. In imports as well, there was a decrease. So export and imports are decreasing. Potentially, the GDP will decline in these year and then quarters. So it's expected old population deflationary scenario is going on with COVID. They are suffering most. All right. On UK side, we have received inflation data, and expected number was 3.1, but it was released as 4.2. That means it's this is the highest level since 2011. So in 10 years we haven't seen any inflation in UK something like this. Also the same rate hike pressure is being done to Bank of England right now. In December meeting they will speak about this rate hike issue. Maybe they don't increase immediately, but at least they may say their plan, and then they may just declare something on that meeting, and then they will probably talk this issue as well. All right, let's go back to charts. We will have three charts as usual. The first one is euro dollar, the second one silver, and the last chart is US oil. All right, euro dollar, as you can see on the chart, it is on decline. It's really on decline, and we see really low levels in euro dollar. Reason is rising dollar index. With rate hike expectation, everybody turning to dollar. US 10-year treasury bonds are rising, and then USD reserves are rising. So dollar index is rising, and just the reverse. And European Central Bank President Lagarde said, we are not making any plan regarding rate hike soon. And some analysts even they say, and we may not see a rate hike until to 2025. That's really long time. That's why people are preferring dollar bonds, and European investor they are preferring stocks. That's why we see new records in DAX, because European investor, if they want to invest locally, they don't have any other chance. All right, so we see that 112 level last night, and actually just early morning. We can see the early morning of today, and after that, from that point, it just rebounded. Right now, it is just waiting for some news, but we may see these levels again. Support level for these currency pair is 1.1273 is our next support, and that one worked last on the last attempt. And on a rise, first we will see 114 level, and the resistance area is right now 114.21 is our resistance level. But we have to see really bad scenario in dollar index sites, otherwise we may see this decline trend for a bit more. Let's look at silver prices.
You are ready to win with us. GAN Markets.
All right, silver is on rise and it's shining. As you can see here, silver is having really good days. And compared to last month in November, we have seen that real low levels like a 22 level. It was the lowest in 2 years time. But from that point, it started its rise and it's going up right now. The reason for gold and silver are just rising together, and they have like it just came closer. It just came closer to 25 600 levels, but it didn't touch there. Actually, it just got close, but then suddenly people just prefer to be in dollar index side. So the risks are right now not that much high, but we see really good levels in silver. All right, what's next? As I said, on a rise, if you see some risk again, we may see on a rise. The first resistance is 25 and 600, but we may see a consolidation in this area because everybody was expecting this year will be silver years. It's not happened. And then on the last month in December, if you don't see any attack in prices, this will be a consolidation area. And the first support line for silver is 24.72. From that area, we may see a rebound if it declines. All right, let's look at US oil prices. What's happening there? All right, the most important chart of the day, I can say like this because it's the key of everything. Oil prices. If oil prices goes down to 70 levels, even 60 levels, there will be a relaxation in all the markets. There will be decline in inflation. Energy prices will decline, and also when inflation goes back, like it goes lower, then we will see some relaxation on Fed officials. all these are happening with the price of a decline by oil prices. So right now we are under $80 level. That's the critical level for oil, and as you can see, it is just trying to hold its position, but 19th of November is contract end day. So just imagine investor, ETF contract holders, they started the month with 84 dollar. So from that point, right now it is trading at 79, almost like $80, $4 per barrel loss. And in one contract, that makes $4,000 your loss. And if they want to keep the contract, and then they have to pay maintenance, and that is another 5,000, total 9,000 in loss. So the price has to go up from this point to 89 level just to cover up losses. So I don't see any point like this. So that's why I'm just expecting these traders will just sell their positions on this contract, and on Monday they will buy the new contract, or at least they will see a few days to keep that one. They won't buy the contract immediately. They will just desire to see some deep points. And as I said, 76 area is or 77 area is my short-term target right now. I'm expecting something like this. If you see a sharp decline today afternoon with US crude oil stocks, you can see this trend start. It's my opinion, but I don't think like the countries will allow to go like a $90, $100. I know you say if they can do, they will do already, but yes, they can, because right now they are stuck in this energy crisis, and even they can use national emergency stocks. That also helps the situation. There are a lot of pressure on Biden, and also Xi Jinping is already using that stocks. In October, we have seen lowest imports, crude oil imports in China. We may see the similar one in US, and then that will make oil prices lower levels. So be cautious. Alright, thanks so much for watching us. We will be together on more news, and then we will cover more charts in afternoon. Have a nice and good day. Bye.